Yo, what is going on, everyone? It is Evan Trades. Welcome back to another one. Hope everyone's trading is going well. This video is going to be, as you can see on your screen, how to find the Draw On Liquidity 2025 updated version. Because I made a I made a how to find a Draw On Liquidity video. It's actually one of my most viewed videos almost a year ago. And now a lot of stuff has changed, but it's basically the same thing. I'm going to be going over kind of reframing that video and adding in some more stuff that I now use to help me find my Draw On Liquidity a lot faster. Well, not a lot faster, but just a lot more consistently and a lot more efficiently. So, and it's very simple. It's very simple. So you guys are going to be able to grasp it very easily. So without wasting any more time, let's get right into it. So finding the draw on liquidity. Finding the draw on liquidity is literally the most important thing that you need to do before even think about taking a trade. The draw on liquidity is your frame of your trade. It is the framework. It is everything. Because without a draw on liquidity, without a direction you think the market is going towards, there's no point in even taking a trade to begin with, because that's gambling, basically. So your draw on liquidity is the most important part. It should be the most important thing and the most biggest thing that you work on, to focus on, to refine as a trader, in my opinion. So I'm going to show you guys what I mean. So I'm going to go back to this day right here. So usually for me, right, some days it's harder to find the draw on liquidity, and some days it's super easy. So, but it all just depends on experience, and because experience is really a big thing. Because if you're new and you don't know how the market tends to move, I mean, it's going to be super hard. But I think this video will help you guys. So this is an example. This was not that long ago. This is January 20th, Monday. So if we zoom out to the daily, right, as you can see, market came down, created these generated highs. Then now we started to see a big move up, right? So usually when I try to find the draw on liquidity, I try to go to the higher time frame first to look for that higher time frame draw on liquidity, that bigger time frame direction. So what do I see? All the way to the left, I see that we have a big daily fair value gap that we're holding, right? And then I also see that we also have these sell side level swept right here. So to basically put it nice, short and sweet, PD arrays, let me write this out for you guys. PD arrays are going to always be your friend when determining where the draw on liquidity is. They're always going to be your friend because they basically determine, they tell you where the market wants to go by validation or invalidation. It's as simple as that. Invalidation or validation of PD arrays basically tells you what high or what low market is most likely to go to, because it tells you that it's a different order flow that's taking place. Because if price, for instance, let's say we're in a downtrend, right? And looking at this, price is quite obviously bearish. Quite obviously bearish, as we can see. A 5-year-old can even look at this and say it's bearish. You know, we're respecting bearish PD arrays right here. Boom, boom. We're bearish. And let's say we have a low. This low right here is our draw on liquidity. You know, because we're respecting bearish order flow. We're respecting these bearish PD arrays, right? Until we eventually go to these lows. But what if we see this? Different story, huh? Right? And there's a fair value gap right here. And all of a sudden, this turns into a IFVG. Now, the draw on liquidity looks a lot more different. Because since we disrespected this bearish PD array, that basically tells us market does not want to go lower. We do not want to go towards this sell side level anymore. So looking at this would obviously be my draw on liquidity, and this would be my external, right? Because we're invalidating bearish order flow. And there's other contexts, there's other things in price that you can use as well. Like if there's manipulation right here at this low, right? We'll have that invalidation. We have a market structure shift or a change in the state, right? Context and information and what price is telling you. So I'm going to get rid of this real quick. And we're going to go to some real price examples. So right here, like I said, we have these generated highs where we're still respecting this big bullish PD array on the daily. We have sell side swept. The market's sole purpose is to hunt liquidity because people have their stops resting at these highs and lows, right? There's people's stops that sold off from on top of here, trailing their stops as we go lower. So people's stops are sitting above here. So the market makers in the algorithm, its sole purpose is to hunt those stops, right? It's its sole purpose to do that, to gather more liquidity, to make the market move even more. So we have sell side swept, we took out liquidity here. And as you can see right here, we absolutely just ran through this bullish or bearish fair value gap. I'm gonna take off the daily right there. You guys know it's there, right? Now this is an inverse fair value gap. So what is this telling us? Oops. This is telling us that price isn't bearish anymore. Price is absolutely bullish. I mean, just by looking at these candles, right? We came back up, disrespected this bearish, daily bearish fair value gap, came back down into it, tapped into it, and took off again. So looking at this as a trader, my automatic draw on liquidity would be this next high, this next obvious high, because that's where liquidity is resting, right? That's the next obvious high after invalidating this. Because if we were truly bearish, we would have just kept respecting this. Oops. We could have just kept respecting this to go and take, you know, this lower here or even these lows. But price didn't tell us that. Because as traders, we react to information and what's being shown to us, and price showed us. We disrespected this bearish fair value gap, tapped into it, and we start respecting it. So the next high, next obvious high would be my draw on liquidity. And just like that, it takes it out. So if you're a swing trader and like to swing the daily, that would have been a nice trade. Tapped right into the inverse fair value gap. Stop right here at the low, targeting that internal high. Would have been a nice 1 to 3 RR. Unfortunately, I'm not a swing trader. I don't have the patience for that, but that would have been a good trade for you guys. So now I'm going to show you guys on the lower time frame what it also looks like. Let's see. I'll show you guys a good example too. Well, we have this. I'm going to draw out the daily again. Respecting the daily. Sell side swept. This internal high we just ran through. So I want to zoom into the lower time frame and see. All right. Actually, no, that's kind of what I just showed you guys. All right, this is a perfect example too of another bullish setup. So our daily draw liquidity is this high. So we're confident price is already going to go here. We're retracing here. We also just invalidated this bearish for value gap again. So price is screaming at us, telling us that we're bullish because of the invalidation of these PD arrays. So now, if you also see, we have a 4 hour. And another thing too, I want to point to you guys that wicks will tell you where the market wants to go. The wicks will tell you where the market wants to go, right? The wicks will always tell you. In this example right here, right? We have this bullish for value gap. I want to see price come down into here to rebalance to see if we can go higher. But as a trader, I don't know if price is going to hold this, because price can do whatever it wants, right? Because trading is a game of probability. Price can do whatever it can really do what it wants. Price can come down here, fiddle around, and then just absolutely disrespect this and go lower. 100%. 100% it can do that. So we have to wait to see what the wicks are telling us and what price action is telling us. So price comes down, we get this fat candle, and then you see this huge wick right here. This huge wick is telling us the story of what's happening when entering this fair value gap. This wick basically tells us the story that this candle came down, all the way down, almost to the bottom of it, and instantly bounced back up. And that should tell you that order flow still is bullish and that we still want to go to this high. So respecting a bullish PD array, we invalidated this daily. We are respecting this inverse for rally gap. I apologize. Ran through this daily for rally gap, this higher time frame. We also ran through this 4 hour for rally gap, bearish for rally gap, right? And now we're respecting and wicking this 4 hour super hard. So those confluences, context, what the market is telling you is crucial to finding the drawn liquidity. What is the market showing you? What PD arrays? Ask yourself this. Whenever you're doing your analysis, always ask yourself this. What PD arrays are getting respected? Ask yourself that, and also ask yourself, what PD arrays are getting disrespected? These are crucial questions you must ask yourself, because they will tell you the true story of order flow and where price wants to go. Looking for a bias, draw liquidity daily bias, whatever. So after seeing that wick, we can expect price to go higher right here. And there's other confluences I like to use as well. I also like to use SMTs as a form of manipulation. I also like to use changing the state of deliveries and just indicating a change in order flow, right? There's a lot of things you can use. I like to use, I'm going to write it down. Confluences for drawn liquidity. I like to use SMTs. I like to use change in the state of deliveries. I like to use invalidation of PD arrays. You know, these are the main three things that I use to basically help me see where price is likely to go, right? And I also ask myself, what are we currently respecting? And I guarantee you, if you ask yourself this every morning when you hop on the charts for your analysis, and you use these three things, SMTs, change of the state, and invalidation of PD arrays, that it will be a lot more clear for you to understand where price is going. So I'm going to show you guys some bearish examples as well. So I'm going to get rid of this right here. Apologize. All right. So looking right here, if you were trading around this time, we had this huge sell-off. We were balanced higher into this huge bearish fair value gap, right? So you could be bullish here, you could be bearish, right? Because we could easily just respect this. If you're trying to find the draw on liquidity here, we're in this huge bearish imbalance. And looking at price, we seem to be respecting it, right? And as a trader, you might be worried like, okay, well, we could easily just come back up and go higher towards all-time highs. Or we could just respect this and go lower to these lows, you know? But we need price to show us, right? We're going to wait for invalidation of higher time frame PD arrays, market structure shifts, for price to show us that we want to go lower, to find a draw on liquidity to, if it either wants to go to this low right here, or if we either want to go to this high as our draw on liquidity on the higher time frame. So we're waiting for invalidations of PD arrays basically. So right here on the 4 hour, where we're in this 1 hour right here, keep that in mind. We're retracing back up. Let's see, I'm going to mark out consequent encroachments. Consequent encroachment, that's a tough word to say sometimes. It's basically the middle part of a PD array. It's great to use whenever your price will respect it. If it stays in the order flow, so it's really nice to see. Like as you can see right here, we're respecting it very nicely. We have this bullish 4 hour fair value gap that price is currently in, and here's how I look at this. If we are bullish, I want to see this hold. I want this to just be a retracement, right? I want this to be just a retracement to rebalance and then go higher. But if we're bearish, if this is the true draw on liquidity, I want to see us absolutely run through these two bearish fair value gaps, indicating that bullish order flow is not in play, to then have a confident draw on this draw on liquidity. So let's see what happens. Okay, we respect it. Okay, keep in mind, look at what we have right here. We have this bearish fair value gap. I want to keep that in mind. So what are we respecting and disrespecting? Looks like we're respecting bearish order flow through that bearish fair value gap, and boom, look at that. Okay, wow, we absolutely ran through these two bearish fair value gap or bullish fair value gaps, indicating that there's a change in order flow, disrespecting these. We respected this 4 hour bearish fair value gap. So just off these two things, 100% you should be bearish. 100 million zillion percent you should be bearish. And your draw on liquidity should be this low and this low right here, and being the start of a market maker sell model. That is how you should look at it. So looking at this now, since we absolutely ran through these two bullish for value gaps, now we can expect price to retrace here, to rebalance to this bullish for value gap, because what are the 4 reasons why markets move? To generate liquidity, to rebalance to equilibrium, to rebalance, what did I say? To rebalance to equilibrium, to generate liquidity, to generate, I always forget, I'm so sorry guys, but to rebalance inefficiencies and to hunt liquidity, sorry, there we go. So this is one of the 4 reasons. You have 2 reasons right here, to hunt liquidity and to rebalance inefficiencies. So as you can see, price taps that bearish for value gap, but we should see lower to hunt liquidity. There you are. So if I could just sum up this video into basically one sentence, I would say the key to finding the draw on liquidity is simple. The key to finding the draw on liquidity is simple. Trading does not need to be hard. Trading is meant to be simple, because if we can keep trading simple, it's easier on our mind, it's easier on our focus and our work. The easier it is to make money. The key to finding draw on liquidity is simple. This is it right here. Validation and invalidation of PD arrays, most likely for value gaps. Validation and invalidation of PD arrays. Okay, what's being respected, what's being disrespected? So so whenever you go into the market, the next time you trade, ask yourself this: what PD arrays are being respected and disrespected? Right? Ask yourself that. Sorry, put that. And then the final thing to also put to note: whenever we have, let's say for instance, price is coming up, here, okay, boom. Actually, you know what? Let me draw a better one for you. Okay. So if say this is price action right here. This is the last thing I'm going to show you guys. We have sell side swept, external sell side swept. And let's say we have an SMT also at these lows. So this is context, right? We are very bullish. Let's say we're in a PD array, a bullish order flow, and we also get an invalidation of this. So now we are 100% bullish because we have this invalidation of this fair value gap, and we're respecting this bullish PD array with also manipulation and sell side swept. So all these confirmations, these are all confirmations here: sell side swept, manipulation in an area we expect to reject, invalidation of this fair value gap. So your draw on liquidity after this gets invalidated is the next recent high, which would be right here. And I'm speaking on the higher time frame, of course. The lower time frame, it's a little different, but for the higher time frame, looking for a higher time frame bias, this is how you should look at it, right? What are we respecting? What are we disrespecting? That next recent high is your drawn liquidity, where you think my price is likely to go. Right there. So I want you guys to look at this, write it down in your notes, and I want you guys to backtest this on the higher time frame, because looking for a higher time frame bias and focus on aiming, where we're aiming in price. The key to finding the drawn liquidity is simple: no validation and invalidation of PD arrays, and asking yourself what PD arrays are being respected and disrespected. That's all you gotta ask yourself. And using the context of SMTs, sell side swept, sell side or buy side being swept in areas where we expect to reject as your context, and using the next recent high as your drawn liquidity. So I hope that was helpful for you guys. I tried to make it as clear as possible. If you guys have any questions, of course, you always know. Love to answer your guys' comments in the comment section. Drop a comment, question, whatever you guys may want to know, and I'll be there to answer you guys. So I hope you guys enjoy the video. Be sure to drop a like and a sub for more of this content for you guys, and I hope you guys have a wonderful rest of your trading week, your month, year, all that. And I will see you guys in the next one. Peace out.